All right, well, the president's been very happy with an economy and some economic numbers that continue going his way, tweeting with consumer confidence as the Dow continues to hit all-time highs. To economist Stephanie Pomboy, market watcher Craig Smith. Stephanie, he has been saying that's the wind at his back, underreported by the media that doesn't really want to do anything but kick him in his back. What do you make of that argument?
Well, I mean, I think we're in a situation where the soft data are certainly giving him reason to trumpet better times. You know, we've seen obviously an increase in consumer confidence. We had a big gain in the NFIB small business optimism. But the million-dollar question is whether this translates to real activity, increased spending, and increased CapEx. And thus far, I would say the jury is still out, notwithstanding the 2 quarters of GDP that were plus 3%. The long-term trend in growth continues to be one of broad deceleration, which really isn't surprising in year 9 of the economic expansion. You know, we're clearly getting long in the tooth, and that's why it's so important, I guess, to get this fiscal stimulus done so we can revitalize those animal spirits.
You know, Craig, the argument has been that the tax cuts go through whatever their final, formation, that as much as the markets have run up, they do not reflect the savings and the extra oomph you're going to get from that. Some classified, I think, Barron's over the weekend, another 7 to 10% could be built in because of them. Others, like Morgan Stanley, have said maybe we haven't even factored in half the gains we're likely to get. Where do you stand?
No, I think Stephanie's right on it. Look, the soft data will paint a pretty rosy picture, but a lot of that's been done as a direct result of monetary policy, and we need to get the fiscal policy right now. And if we do that, then I think you can have growth rates of 3.5% or 4%.
Is this tax plan going to do that?
You know, Neil, I got to be honest with you, I don't know. Obviously, a 20% corporate rate is going to be a very good thing for businesses, and I'd like to think that that's going to have a tremendous stimulus impact on this economy. I'm more concerned about the global economy, quite frankly, at this point. The G7 countries are still very, very weak in their growth. I think they're well below their inflation targets. We have the threats of protectionism creeping in from other countries against other countries. And so I think Stephanie's read on this is spot on. I don't think everything's as rosy as everybody's expecting for 2018.
Both of you are Debbie Downers. I want to just add that. Stephanie, I kid, but to make this point, I mean, a lot of young people come up to me here at Fox and elsewhere, especially now with the rampant market run-up, and want to know if they can get in. And what do you tell folks like that who've seen this and they want to be a part of it, but they're concerned as to whether they're too late to the party? What do you tell them?
Well, I don't want to be Debbie Doomsayer, but I would strongly suggest they sit tight. You know, I look at, obviously, sort of the broad fundamentals, and I have a really hard time putting together a justification for the rise in the market that we've seen. You know, Trump likes to tout the $5.5 trillion increase in market cap. Well, that's 7 times the growth in GDP over the last year, and it's 47 times the growth in profits. So for those who point to strong earnings as justifying the move in markets, that number just doesn't bear out.
Well, you know,
on
the
closer
part of that
inspection.
is averaging out where we were before with the meltdown and everything else, and hence you get people who jump on that and say, you know, allowing for the meltdown, we're still nowhere near where we could be. I don't know who's right on that. But, Craig, do you get a sense here that the Federal Reserve stands to sort of spoil this party, not only probably likely hiking rates another 0.25% tomorrow, but continuing that, and perhaps more aggressively than once thought next year?
Yeah, I do, Neil. I think that's a great observation. We know a 1/4 point is baked into the cake already. And it wouldn't surprise me if the Fed went a bit higher, just to see if the market is resilient enough to take it. Maybe we'd see a quick sell-off and then a quick run back, because it seems to be like Bitcoin. Everybody thinks it's headed to the moon. Okay, but I do believe that, like Stephanie said, you do not have the underlying growth in this economy to support these market numbers. And I think if you take the punch bowl away, it's going to have a real solid impact to the downside on this stock market.
You know, Steph, you mentioned Bitcoin. I'd be curious your thoughts on that. I had a guy who runs the CBOE who's trading futures on them right now. He says and hopes to add some stability and predictability to something that has been anything but what are your thoughts?
Well, I'm going to really reveal myself to be a total square. I just don't get it. You know, the whole Bitcoin thing is beyond me. In my view, the two reasons that you'd be interested in owning it both don't hold up on closer inspection. One is that you're distrustful of central banks and government institutions, and you want somewhere that you know is, you know, untouchable in terms of the reach of policymakers. And the other one is that you're trying to shelter money and be beyond the long arm of the law. And on your point about the regulators, I mean, they're just barely getting started. If you think Bitcoin is going to pose some kind of alternative to global currencies, policymakers, I'm sure, have another idea. They're not going to let that happen. So I think we're going to see a huge regulatory push here that's going to really remove one of the key appeals of Bitcoin. And then in terms of, you know, people who are trying to find an alternative to fiat money, you know, your access to money is only as good as your access to the internet. So you know, in a doomsday
you raise a lot of legitimate doubts. So, you know, history is a way of showing that progress happens. Whether this is indeed progress is anyone's guess. But, Craig, how do you treat this just as a phenomenon?
Well, first off, Neil, let me tell you that Bitcoin distinguished itself today in a very unique way. In 1634 through 1637, we had Tulip Mania. Today, Bitcoin went beyond the times returns that we had during Tulip Mania.
Is that right? And you were there to cover the Tulip Mania, so you are a legitimate expert.
And let me tell you, I believe in the underlying technology. I believe in blockchain technology. I believe in distributed digital ledger technology. Here's the problem. It's like the internet. We were ahead of ourselves in 1999. We got over our skis, and a lot of people lost a lot of money. I do believe blockchain technology is here today, but what is the value of it, Neil? And that was the whole idea of trading futures, for price discovery. I can tell you what a bushel of wheat is worth. I can tell you what a barrel of oil is worth. Nobody can tell me what a Bitcoin is worth except what the last guy paid for it, and that story doesn't end well, Neil.
All right, you might both be squares and fuddy-duddies, but you are both brilliant. So I will, I commend it and thank you both for that. Thank you guys very, very much.
Thank you.
All right, and on Bitcoin, a sort of uproarious day.